This conference will now be recorded.
Good evening, ladies and gentlemen. This is K.I.S.S Trading Frank. Excuse me. It's the 13th of March, 2019, approximately 8:50 p.m. Eastern Standard Time. This is a strategic market update webinar, the midweek webinars. We do 2 or 3 during the week. Full disclosure, this is purely for financial education, not for any solicitation or advice. These sessions are recorded, uploaded to the K.I.S.S Trading Google YouTube channel for viewing by all other members, free trial subscribers, and anyone out there, your friends, colleagues, anyone anyone who has an internet connection can listen to it, learn something, make some money, and be a little bit more educated and demystify the markets. That's our slogan here at K.I.S.S Trading. Huge resource. Second point that I'd like to remind everybody all the time, we have a fantastic Instagram account where we highlight our days, some of the bigger highlights of the option trades that we do during the day. And feel free to create an Instagram account if you don't have one, and click follow. So you get a chance to see the options charts. You get a chance to see those 3, 4, 500% type of gainers. That is not a real-time content delivery mechanism. I mean, the Instagram account, it's simply there to highlight some of our more powerful trades so people can review it at the end of the day in one glance. That's what Instagram is all about. We have a new free trial member, Nazir. Nazir, I left you a voicemail earlier. Suggest that you speak to me as quickly as possible. That is standard policy here at K.I.S.S Trading, that we speak to all free trial subscribers and new members to give them some guidance on how to navigate the service and how to capture some of these unbelievably tremendous gains that you might not be used to with other services and other people that you follow. We are a very, very technical service. We keep our emotions in our back pockets, locked in the dungeons. We don't like to state too many opinions. We follow the charts to a high degree of discipline, and they work out very well. So welcome, Nazir. We have House in the house, great loyal member, and we shall begin. So, first thing I'll tell you all of you, want to remind all of you that everything that I've been talking about for weeks and weeks, months and months now, and specifically if you want to use a reference point from the bottom of the market of this big reflex rally that is still continuing, and the bottom of the market, which was December 24, 2018, the Christmas Eve massacre, as we like to call it, has all come true. Markets never go up in a straight line. Newer members and free trial subscribers will learn that very quickly. This is not some sort of Disney World where everything just goes up in a straight line, comes down in a straight line. Markets are algorithmic. Markets move in cycles. Markets move in waves. What we do here at K.I.S.S Trading, we capture a very large portion of those cyclical waves on an uptrend or a downtrend. It's really as simple as that. What is hard is for retail emotional traders, what we call RET traders, human traders, to adapt to this methodology of tactical trading to manage their trades to the highest maximum profits, not necessarily buy the low and sell exact high, because we don't know exactly what the exact high is. We actually do. If you look at my charts and stuff, we actually do pinpoint the exact highs. But as long as you can catch anywhere from 60 to 80% of the move, you are well ahead of the game. You are the 1%. You are the elite of trading. And that's what we do here at K.I.S.S Trading. Now, the more mechanical the markets are, which they certainly have been and have been for years now, and more so now, and speeding up more that way, algorithmic high-frequency trading, robotic markets, black box-driven markets, the better off the results you will get from my work. Because my charts are designed to capture the geometric, algorithmic, arithmetic movements in the market, and not some opinions or feelings about, oh, I'm not feeling too well today. Yeah, markets are going to come down. That's what my grandma tells me. Well, we don't do that here. So everything that I've said, whether from the last webinar on Sunday evening or was it Monday? Monday evening, or from 2 weeks ago, or a month ago, or 2 months ago, please feel free to go review it and come back and tell me that I was wrong. I am wrong at certain times. I am very seldom wrong on a cyclical, intermediate, short, or even a long-term move in the market. I could be wrong on a certain day that I didn't catch that wave because there was an unquantifiable black swan event, whether it's a Donald Trump tweet, whether it's the Chinese, coming up with something stupid, whether it's a Canadian tariff, whether it's a European auto tariff, which I think is the dumbest thing ever, whether it's a stupid soap opera that's happening in England, in the UK, there's Brexit debacle, which I've said before, and I'm dead right again. That a no deal that Brexit thrown out or Brexit delayed is the best thing for global markets for now. Keeping all the politics aside, Brexit is completely a disaster for financial markets short term. Okay, and that's the reason why the news came out this afternoon that the parliamentarians, even in Theresa May's own party, the Tory party, rejected her proposal. The British pound rallied the fastest in 2 years and took the markets up. Asian markets are higher right now because this Brexit looks like it's going to go in the Tower of London, in the dungeons, in the gallows, because tomorrow there's another vote, and that vote is going to be whether or not there's going to be a no deal Brexit, which is going to be the stupidest thing ever. I'd short the crap out of the market for a couple of days, on March 29th, which is the official date that for the UK to leave the European Union. In my opinion, they're probably going to work out a deal to delay Brexit, work out something, and maybe at some point Brexit will happen. Anyway, all that stuff is explained very clearly in my past webinar. And here at Clueless A Trading, we like to have some brains and not just try to scalp something for 50 cents, because we are not pikers here. Other trading services will all take glory. Oh, we got 30% on those options trade. Well, how about giving you 300%? How about giving you 2,000%? Such as booking, aka Priceline, in 48 hours from 40, 50 cents to $10 and still going higher. Nobody delivers those type of returns like we have shown. And we don't just say it, we show it, and we guide people through it. So even if you got half of it, you're feeling like a real trader. And here is your option chart on booking the March 15, 1770 calls that was proposed to you all on Monday, on Tuesday, at around this zone here, right there. So whether you bought it at 50 cents, 60 cents, even $1, you rode the wave. You could have sold it all or sold a bunch at around the 9+ range yesterday. That's 800%, 900,000% net just for buying it and holding it. Then it pulled back towards 4. I told people to buy the 1780s, which also went through the roof. And then this went to almost $12. That's net, roughly a 2,600% gain on your money. So if you put $100 in, I hate this stuff. I'm trying to write with the mouse. I don't have my other writing board right in front of me right now. So if you put $500 in, could have taken out $10,000. Fact. So if you put in $500 here, then somewhere around the $10 range, that's $10,000. And if you don't think that, if anyone did that whole move in one go, my hat's off. You got to show me the print. I'm going to basically give you the biggest gift of all. All right. But as long as you caught the meat in the middle, you still made some substantial money. As long as you took the trade, and ran with it, did something with it, shows that you are a trader. Which brings me to my next point, and this is behavioral finance, what we call here behavioral game theory. All right? If you are not a risk trader, please do not try to be a fake options trader. If you're not a risk trader, then please do not attempt, I repeat, to be an options trader. Options trader is about quantified risk. We quantify the risk to a high degree of accuracy, primarily because of my structured charts. If you think you can just throw something out there and it's just going to stick, well, yeah, here and there it will. On a fast-moving upside market, everybody's a friggin' genius. Well, what about not being a genius? I mean, what about the real genius like here at Clueless A Trading and what we deliver when the markets are down 400 points and none of you are in sight? That the chat room, that a single person is in there, which is fine with me because it gives me more time to basically do my stuff and deliver all my content, which is delivered on the real-time Twitter feed. That's where the genius comes in. To have a predictive element to the market using quantifiable charts. To buy the market on the 8th of March, when nobody wants to touch the market and every other talking head idiot on CNBC, well, some are smart, most of them are idiots, are debating whether this is the end of the bull run. And we went long. And we were long through this phase 2. This was a falling wedge breakout. And every step of the way, I've guided you all. So, key elements, you always go back to the basics. The hardest thing to do in any market, that happens to me too, you could have the most phenomenal entry, but with the exit is of critical importance, because that's what's going to change your P&L. That's what's going to change your mental calibration. That's what's going to make you feel confident enough to take the next trade and win. And even if you lose on one trade, like I've always said, don't take it personally. You're alive. God's given you the eyes, the ears. You're waking up in the morning. Thank God for every single minute. I mean that. And get back to work and make the money up. Let's say you were down a bit on a bunch of trades which you did some stupid stuff on, even though they went the right way. What if you took a couple of $100 worth of booking? Your P&L and your account would be up 300-400%. And that's not just one trade. What about Nvidia? What about Netflix? What about Apple? What about even Tesla? And Google? And Electronic Arts? And Tandem? And the SPYs, which were up 400% plus today. These are lottos. They cost 30 cents. They cost 40 cents. What about Chipotle, which has been a consistent swing trade roller that we've been playing from 250, 270, 275, closing into 650 now? So enough of the bullshit excuses. You got to tell yourself that and just get to work. Take small pieces of separate trades. You don't always have to lump into one. But if you sit around trying to be like super selective and then tweeting me in the middle of the day, oh, I'm in that and that thing's not up, well, I'm going to smack you so hard, feel free to leave my service. I'm dead serious. Because I'm giving you guys 90% of my trades are super winners. And I say it because I deserve it. I don't brag about how much money I make. I brag about the percentage returns and the delivery that I'm giving it to you guys. So don't always be, you can't take all the trades. I understand that. I can't either. I missed a couple of monster trades. I missed GH yesterday, Guidon, which was an IPO that I mentioned to you guys to buy at 27. The stock's closing into 96 right now. A month and a half ago, 2 months ago. GH, look it up. I missed that yesterday because I screwed up on the earnings date. I missed out on Melly over the last 10 days. MELI. So enough of the BS excuses. Get to work. Do something. Because I'll tell you one thing before I get into the technical aspect of what we do here. Whether it's a bull market or a bear market. The trade management part is exactly the same. And you all know it better than I do. We had a bull market from the bottom of the market. This is a weekly chart from 2,300, thousands of point higher. Now we are attacking the Berlin Wall. And if somebody doesn't know what the Berlin Wall is all about, well, feel free to go listen to my previous video. Okay, right there, that major resistance. Obviously, there's going to be some choppiness at that part. But I believe we're going to break out of it this month. And we're going to head towards that upper end of the Bollinger, which is 2880. That's another 400 to 500 points. That's my estimation, guesstimation based on my technical charts. But before that, we could take a quick sharp 200-300 pullback, no problem. Just give it to me. So whether it's a bull market or a bear market, retail emotional traders who do not follow the technical discipline of these structured charts that I give to you guys for a minimal amount every single month, my rates are really low compared to the performance. You all know that. No one can argue with me on that. Okay? You guys won't win. Because bull markets, these type of powerful surging markets, are very, very difficult because that little voice in your head, which is used to just looking at prices and not technical, say, oh my God, it's too high. It's too high. I can't buy right now. I'll wait for a dip. Yeah, as if life is just one little cakewalk, a picnic on a beautiful Sunday picnic in Central Park, New York, okay, on a beautiful day, that it just comes, the dip just comes. And when the dip does come, the RET, retail emotional traders, are nowhere to be found. Because that tactical dip happens fast, furious, and bang, just like that, within a day. This dip came. Who bought? Very few of you. I know some of you did. We're in there because it was a quantifiable dip, which we saw, we measured, we said that if we break 2713 or 2700, we can possibly go lower. Listen to my other videos. Because my videos are my blogs. Those are my videocasts. I don't like writing long-winded blogs, even though I'm probably one of the most proficient guys in English, all right, compared to most people out there, because I don't like writing. I like to show it on these videocasts so you can visually see, visual stimulation so your brain can look at it. So please, God's given you two fantastic eyes, whether you wear glasses or not, whether you have LASIK, use that to talk to your brain and get to work. All right. I want to keep this nice and short today. It's pretty exhausting all day, all the content. For newer people like Nazir, everyone welcome him, you need to go through the Twitter feed big time. You need to scroll through. You need to read. You need to get to train your eyes to look at these precision charts that I put in place, the returns, and that way, that you see the running commentary in the markets, what we're doing, how we're doing it, and move along. That's it. So on that note, so this is really your day trading chart, if you want to look at it that way. Day and swing trading, I call it more the day trading chart, the 15-minute E-minis, which we use as a proxy for the overall market. This is where we are right now. So over the complete near term, which could be a couple of hours, it might be that we have a double top. Might be we have a double top. Now, there are many reasons why the market is not ready to completely collapse, is because the overall involvement by institutions, as well as mom and pop, who are non-existent in this market, other than their 401ks and their pension funds, are basically have very minimal exposure to the market. The amount of jubilation and excitement and enthusiasm and euphoria that generally connotates a overall market top is non-existent. You don't believe it? Look at yourself in the mirror. Just go in front of the mirror and ask yourself, am I euphoric? Am I making a ton of money? The answer will resoundingly come back from the mirror. No, you are being an idiot. And that tells you from a behavioral finance standpoint that the market has not fully topped yet. So we have a mini double top. Where would be the mini double bottom? I would say that somewhere in this range, which would be good for about 100 to 150 points or so. We should be, that's why we have the red line here at the $2,800, S&P level, we should get some formidable support, and of course the next level of support come into play, and I have those marked very, very clearly. This is your big breakout. This is at 2802. So I would say that as long as we hold the 2802, 2805 level on the E-minis, roughly or approximately the same on the S&P 500. Well, on the S&P 500, it'd be more like a couple of points lower, 2798 or so. We should be fine. Now, these charts, I don't want to get into it on a very specific basis because that's your job to figure out. And if you really want to learn about this, sit for the 2 complimentary free sessions that I give all new members. So Nazir, you should when I talk to you, set up a time for those complimentary sessions to get you going. You will know what I'm talking about. So this is the zone basically where I would be watching out for any substantial breakdown, which is the 2800 to 2792 level. If we break this, then we have that big red line here that I've drawn come into play, 2785. So we could, believe it or not, barring, all kinds of stuff can happen. There could be a tweet out of Trump. There could be something coming out of China from Lighthouser, our trade representative, who are doing a terrific job, but saying, you know what, we're really tired of eating Beijing duck. And I'm really tired of having those egg rolls. They stink. And the next thing you know, the market's going to drop 300 points. Okay? Easy. Because the China's deal is still in flux. It's a very hard negotiation. Respect that. But it is politically very expedient for President Trump as well as Premier Xi in China to cut something, some framework. And that's exactly what they're going to do. But the markets are still nervous. Now, the markets shoot up prior to that, up to the levels that I projected, and I've shown repeatedly on my multiple charts on my real-time Twitter feed, on the advanced quad charts system, that if we get to 2840, then regardless of what that framework is, there's a good chance that the market's going to pull back on the news. Like they say, buy the rumor, sell the news. So all these are drawn very, very clearly. This is your rising wedge. Upper end of the rising wedge is somewhere around 2840. So at this point, you don't want to be rushing into things, overloading anything, because the time to overload was here, 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 not necessarily here. Okay? So your exposure has to be somewhat minimal. You still want to have a long bias with some tactical shorts in place, such as the SPY puts, just in case. VIX is extremely oversold. The VIX is extremely oversold and can any minute, like it tried to do on the news that all Boeing 737s were grounded, the market pulled back sharp, then pulled up. So those are the hairy moments, unquantifiable moments that you have to be prepared for. Could be a most dangerous piece of news coming out is that China negotiations are delayed. They haven't met any common ground. The markets are going to move in a split second. So please beware of that. That's why I watch the VIX like a hawk. The VIX is looking like it wants to go to around the 13 level. It is around 1340, 41. It could go lower. If you look at a longer term chart of the VIX, it could push down, believe it or not, to 10. And that would be extreme. That means the market would go, the S&P 500 go to 2880, and the Dow Jones Industrial Average would go to around 26,300. Now, I've mentioned these numbers before, and they've been very, very correct. So again, cautiousness, I'm always cautious. All right, always cautious. I never let go and say, oh, that's it. Even though my targets are extremely accurate, I'm always cautious. So manage your trades based on the charts. So that's it. That's your short-term chart. There is nothing to say here. It is still an uptrend. These channels have been drawn to show you where they can come, where they can bounce from. Look at this. This was the first channel acceleration, the bull flag consolidation channel, when the rest of the world's telling us that the world's going to fall apart. We broke out of that. Now we're coming down. We could possibly test the upper end of this consolidation bull flag right here. This one, right? We could break below that and hit 2798. No problem with me on that, as long as the bull flag consolidation channel remains intact. Then we have an acceleration channel here, this one, there. It's possible that we can come to the lower end of this and make a bump higher. Remember what I said 2 weeks ago, and even on Sunday's video, This is, and prior to that, last week, this is options expiration week. This is monthly options expiration. It is generally a bullish event. You are seeing it being played out. This is not the first time. And on top of that, this is a quad witching week. Quadruple witching, options witching. So there is an inherent bias for the market to move higher based on technicals, option geeks and all that, Greeks and all that stuff. So if I know I have members, you just take me at my word because they've made money, gazillion amounts of money off my forecast and my trades. That's it. He said it. We're doing it. They stay long. They're actually smarter than me because I tend to be more quick in sometimes taking my profits because my position sizes could be a little bit bigger, and sometimes that leaves some of the upper end of the room and I'm not there. But my forecasts are there, and what I'm telling you where it's going to go is there. So options expiration week is Friday, day after tomorrow. So we have 48 hours. It's not going to just zoom up into what do you call Friday. Most probably by Friday morning, this run up for the short term is going to ease back. That has nothing to do with individual stocks, but just overall market. Next is your very clean chart here. No markers, no, well, lots of markers as in resistance support lines, but no arrows, no kindergarten arrows. Okay, so this is your 1 hour chart. You can see what's going on. Here's the acceleration channel. We could come down, retest the upper end of this breakout right there. This one, 2809. So futures could be down from here another 7 points. You guys might be looking at it and go, oh my God, futures are down 10. Well, no big deal as long as that this was a gap here that it filled. So as long as we hold 2792, we're good to go. Let's take a look at the on the daily. The daily is again bumping against the Berlin Wall, right? The massive Berlin Wall before it fell. So this is your limit. So once you hit these type of massive resistances going back to the 17th of October 2018, obviously you're going to see some back and filling. So that's exactly what's going on. If it fails to break it this time, I would say that we're going to get a quick, sharp pullback. It needs to break this wall because attempts has been 1, 2, 3, 4. This is the 5th time. After the 5th time, if it doesn't break, that means this Berlin Wall is is a very powerful resistance. So moving back into this zone here, 34-day moving average, 50-day moving average, even though they're trending higher, there's still quite a drop. You're talking a 100-point drop. That means 600 to 700 points on the Dow. But we'll certainly be active, and we will buy SPY puts as needed, and we'll go from there. But like I said, the overall low participation of monies in the market is and the dogmatic shorts, just some of these 2 Sigma funds and these guys constantly shorting the market, the George Soroses of the world, they need to be decimated so the markets keep on pushing higher. The short squeeze continues. That's how big money works. Okay. Next, this is a very interesting chart which I've shown many times. This is your weekly chart. We have a double barrage bullish engulfing almost a bullish engulfing candle. This is extremely positive, extremely positive. Generally, when we see this type of motion, we have another week or so of an up market, another 1 or 2 weeks. So see here. So basically, that would bring us up into the 2886 level or thereabouts. This is your weekly chart. This has nothing to do with the intraday shenanigans, but this is extremely bullish. So far, the stows are cooperating. They're staying above 80, and they're just up there, frustrating the shorts, scaring the living daylights out of retail traders, institutional traders, and the idiots on CNBC, Fox Financial Network, and Bloomberg, like I said, is a little bit smarter, but even them, and of course the rest of so many of your friends. And I would say all of StockTwits, all bearish. I don't even bother going to StockTwits anymore. I should post a little bit more given the fact that I have almost 33,000 plus followers, and they're all waiting to see what these charts are, but they should all join here. So pass the word around so they can see what we do here. So I don't have time to really post there anymore. Anyway, so there we are. This is extremely bullish. Can it be blood red? Sure it can. Sure it can, for reasons that I just explained repeatedly over the last 10 minutes. This is your monthly chart, and this is probably the most bullish chart out there. This goes back to 2009. Now, the reason I'm explaining all this, just to repeat again, just so some of you who have short-term memories always keep forgetting, why does he talk about the future so much? Because that is the real trader's market. That's where the kabuki actors are. That's where the stage, the game is played, on the futures markets. Okay? And if we can understand the dynamics of what's happening behind the stage, then we can perform as better actors, i.e. more money. Right? Exactly. So when we look at this, quite simple to understand. It is starting to move higher. Of course, it crossed over. We were calling the shots from all the way down here when it crossed over all the way. And if you remember, we actually called the bottom of the market. Please go review my video cast. Give or take 10, 15 points on the S&P at that 2,300 level. And then we basically recalibrated to see how much the markets could go higher. And this is where we are right now. This is still a bull flag. And if we do bust a move, we're going to go to the highs. Now, this is not going to happen in one day. This is a monthly chart. Again, end of the quarter is March 31st, right? Well, March 29th, because 30th and 31st is the weekend. So the fund managers and my old colleagues on Wall Street want to end their month on a strong note. Strong Q1. Show it all in the books. Make some, take the bonus. So they're going to, I think, prop the market higher till the end of the month. And for the first, the momentum takes it over into the first week of April. Then tax time comes, and we deflate. So there is a shot, not to the old highs, but there is a shot into the high 2800s. But this is looking good. Bull flag, some good resolution coming out of China. This Brexit crap thrown out or delayed. You're going to see what no one ever thinks they could see, which is a sharp move higher, just the way no one ever thought out there. Very few. Show me all the other services you guys pay for or follow. Sure, some of you do, and you should. Who calls the market shots like I do? So this is where we are. So this is pretty bullish. We get severe overbought when we get into these levels. Okay? That's when everything seems like, oh my God, it'll never stop again. Oh, everything's going to go higher. That's what we call, we're in the midst of the 7th inning of wave 5. Elliott wave 5. Where you guys are interested. We're getting members coming back, joining us. Where were all these members? We're at the bottom. I love old members coming back. It's always good to see familiar faces. But where were you guys at the bottom when things were dirt cheap? Not a peep. And even though I reached out to some of them, guys, this is the time to put money in the market. So bottom line is study yourself and you'll understand the markets. When you're starting to feel that, feeling like, oh, looks like it's safe enough, it's comfortable enough, boom, that's when the market's going to kill you, literally massacre you. All right? It's going to be a drive-by shooting. So we are not there yet. Maybe a couple of weeks we're there. Just so you know. You know I talk straight. I don't bullshit. Everyone's starting to feel a little bit comfortable. Why? Because the market's going higher? The real comfort zone for real traders, for real human beings, is at the point of maximum pain. That's when true character shows up. And that was around here. Okay? So now it's the overflow. Let the lemmings come in. We are positioned right. We'll do tactical trades. We'll sell it to those idiots. Okay? How about that? Because by that time, they won't be able to resist watching. Say, oh, look at this. The market's almost getting to its old highs. And we'll scale back. Being a contrarian is easy to say. Being one is the most difficult thing you'll ever do in your life. Okay. On that note, there's a lot of stocks, by the way, which are still, that's a broader picture of the market. Now I'm going to just open it up for a quick couple of stocks like I do. And I'll throw in a couple that I think are good to go. Let me throw in a chart here. Price line still has room to move. So let me show you the chart, which I've already have for all of you nice people. What am I doing here? What? 1 second. Okay, so let's take a look at booking. All right, I love big cap stocks which have fallen out of favor temporarily because of an earnings disappointment. So let's take a weekly that I've been showing you guys, daily I've been showing you, and this is the beauty about options trading. This puny little move for 2 days generated 2,600%. $500 would be close to $14,000. This 2 bars. Respect the power of these charts. Just these 2 bars. When I picked up Priceline, I wasn't really monitoring it. But I started to look at it and I said, guys, it's time to get in. And that was on Tuesday or Monday. Can't remember. It's like 2 days ago. This 2 bars and the stocks barely, it's exactly at the level that I said it was going to be, which is basically the last sell point. You know, it's a range, and the range was 16. The range is roughly around 1760, and it went to 1769. We bought the 1770 calls. They were 40 cents, 50 cents, a dollar, whatever. So these 2 bars alone could change the profile, your mental and material monetary profile of your account. Now this is a daily chart. The stock could easily pull back $5, $7 as long as these candles remain somewhat green. We have a 50-day moving average coming up right here. Okay, this is money in your pocket, so please listen and act. This 50-day moving average on Priceline, which despite this huge earnings drop, the crossover of the 34 and the 50 is still intact. That means the real big money, which owns Priceline, never left the stock. Otherwise, we would have these lines, the 34 and the 50-day moving average, just, why does it keep on changing colors on me? Okay, just crashing down over each other, in which case you could just short, 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 short. Here, we have a range. We are on the top of the range right now. Let's see how it reacts. If it breaks out, it's going to hit 1790, just like that. Like it'll take maybe 10 minutes, because Priceline's a heavy-duty stock. So your 50-day moving average is 1790. The 34-day moving average is 1832. And the 20-day moving average, and these are the things that I follow closely, is 1820. Remember, when we bought the stock, the 1770 calls, the stock was trading somewhere around 1700 or less, if you all remember. I took a flying bet based on my charts that it was going to go towards that 1760 level. So I said, screw it, let me buy the 1770s. And the stock hit 1770 today. You want to get any more accurate than this? And not because I guessed it, it's because the charts are showing it. You just have to know where to look. So these moving averages are in play. So the stock is very much in play. This is also very exciting. The stochastics, the long-term slow stochastics are just starting to turn. Priceline, I'm going to throw out, can get to 1880, 100 points from here and fill this gap. Somewhere in the middle, it goes to 1808, 1830, but there is a good shot that if these internals start to accelerate and these green bars start to accelerate, remember, 1 million shares of Priceline is a lot of money. It's the big boy stepping in. Aside from that, the hedge funds are trading it, and we knew, and we basically did it faster than them. So this is a stock still in play. But in order to do this, you have to be a really tactical trader. Can't be just trading up prices, because price line can be up 24 points, and the next minute you turn your head, it could be down. I mean, it could be only up 15 points, right? So you got to watch these charts. Throw in a stock, guys. You guys, after all, are traders, hopefully, right? You do know what the stock market is, so I don't want to waste all my night here. So throw me a stock. So I'll pick the new kid in town. Nazir, what stocks do you like? What are you trading? Tell me. Go ahead, man. Hello? Okay. Yeah, scared
I
him
got
away.
one, Cliff.
Yeah, go ahead, boss.
Netflix.
So Netflix chart looks really good. This looks really good. And I know Netflix is pissed on by some analysts coming out there. Oh, their foreign expansion is not going too well. Disney's going to eat them alive. Yeah, I've heard that crap many times before. Disney's going to eat them alive. Disney can't even do crap. They can't even, Mickey's trying to come out of the closet for the last 5 years and live with Goofy, and they can't even handle that. Okay, just kidding. No offense meant to anyone. So bottom line is that this is a large. I'm giving you the macro picture. Obviously, you can trade it intraday as much as you want. This is a very large inverse head and shoulder. Your neckline is right here where we are right now, or that 361 level. Breakout of the neckline will take the stock straight up to the last major sell zone, which is 380. So the best way that I trade Netflix in 10-point increments. In or buy some long dated calls and just not look at it. I still have in some of the crown. I just left it there because this one is you can look at it, as a cup and handle too. So you got your cup, little handle, the breakout. I look at it more as a consolidation channel, right? Like that. Upper end of the consolidation channel is 380. Any breakout over this handle, like a cup and handle, that normally looks like this, but it can also look like this. So if it breaks out, the stock is basically going to go to 390 to 400. There's a big gap here, if you notice, and that's at that 390 range. Let me clean this out. Here's your gap. That stock is in the 390 range. The problem with Netflix is very news driven. So one analyst coming out, upgrading it, downgrading it, something that, Apple's coming out on the 14th with a new streaming service. So Netflix is in its crosshairs. Not that Apple streaming service is going to do anything. Apple's got a music service, right? Have I ever heard it? No. I listen to Spotify when I want to listen to music. So, but headline-wise, that's a risk that you have to take into account. I believe it's March 14th. No, when is it? When's Apple's big event? Where they introduce their streaming service. So, movie streaming service. So those things have to be kept in mind. But so far, technically, it looks fine. Technically, it looks fine, but you have to be quick on the trigger, or you have to have full belief that this technical chart totally work, which most cases it will, and you're looking at an overall move towards the 380 to 385 level. So that's my take on Netflix, but I really keep it close to the vest in the sense that any type of headline risk on Apple or somebody can drop the stock very quickly to the 340 range, which is the rising 50-day moving average. And if you're stuck in an option and the stock drops 20 points, then you're basically toast. Even though it should bounce from here, because that rising 50-day moving average has held the stock through and through. In fact, the rising, this line here, the orange line, there you go. 34-day moving average is 351, has acted as major support. Every time it's come over here, aside from this time when it fell on the 8th when the market dropped, aside from that, this is what it's riding the 34-day moving average around 352. So that's my take on it. Nazir, you were going to ask a question, but you got cut off, or what happened? Facebook. We did very well in Facebook. So far, it's looking really good. Again, it's from a macro standpoint, Facebook is good to go. But Facebook also faces a lot of headline risk, which has nothing to do with technicals. What's the latest headline? Facebook is going to be criminally indicted for data deals or something. So these type of things, in my opinion, muddy the technical waters in Facebook. But we were long Facebook all the way from here, if you guys remember. We traded it very nicely. Then the gap open into earnings and all that. We did it all. But I am hesitant to hold Facebook on a swing trade primarily because of the headline risk. On a day trade or an overnight trade, sure, no problem. But the charts look pretty damn good. I would be more of a buyer of Facebook at the 20 moving average, which is around 165. However, if market cooperates, then we are looking at 180. I would be more of a swing buyer on Facebook at the 20 and the 200-day moving average. That's around 165 or maybe a little bit lower. This is a nice cup. I would look for a quick consolidation, but so far, the headline risk is what you have to watch for. Aside from that, technically it looks good. This gap of Facebook right here in the 180 level should get filled. And that could possibly happen towards the end of the month. So Facebook is really not necessarily the best name you want to pile in too much money. Let me show you a frigging name and you should go to the Twitter feed and you know what I'm talking about. These are the names which don't get thrown about, which are the ones you want to own. I mean, look at this frigging chart. We've been long here, we've been long here, we've been long here. This is good for 81. This is good for 88. Tandem Diabetics. That's a Canadian company. You're a Canadian, right? You're from Toronto? My brother-in-law's from Toronto. What do you call these Tandem Diabetics? They just got approved in Canada for their absolutely unique revolutionary diabetic treatment. And so these are the type of stocks that I like, which are not held hostage to whether the Justice Department is going after them. So this is good. The pot stock, this one definitely good to go. ACB, not something I normally trade. Love this chart. Love it. Stock's good for 11. You buy those calls. We bought the calls at what? 60 cents. They're closing into 80 cents. That's 33% on your money. The stock's good to go to $11. You're going to have it double on your options. Cheap calls, 60 cents, 70 cents, 80 cents. Sell them at $3-4. Like EA, like Electronic Arts. That was another 2,000-point gainer, 2,000% gainer just 2 weeks ago. Now it's back on the horse. That's another stock. EA. Don't always go for the name brands. Believe me, they'll kill you on those. So here is our chart on EA. Absolutely phenomenal. The stock is going to hit the downtrend line at 103. So you buy these calls at a buck 80 cents. It was 80 cents this morning. They went to $2. That's 200+% on your money. Think like that. You got to think different. Don't always think like, I got to buy Google. I always got to buy this or that. No. You want to build your account, do it on these type of small trades where you can buy some size and put it away. So if it slips, you don't feel like you just lost your house. You buy $8 option is down to $2. It doesn't feel too good if you have a couple of them, right? But you buy 10 options at 60 cents and it drops to 40. You don't feel too bad. Think. This is a beautiful chart, and EA is solid. This was what we played, Nazir. You weren't here. You'd have lost your head. You're already losing your head in one day we've been with us. Okay, the stock went from 73 down up to 110 in 2 days. I'm sorry, in 1 week it went to 96. We played it. Buy. Distress, big hammer reversal. We started buying. Here, right there. Look it up. Look up my chart. Scroll down and look at my charts from that date. So this is still good looking. All right. I think the stock goes to 109. Those are the type of things you want to buy it a month out. Buy April 18th. Buy the 109s or 108. Sit there. If it pushes back, buy a little bit more. This is a large, what we call a macro. Oops, sorry. Forget this part. This was like the ultimate perfect moment, and we grabbed it. This don't come too often, all right? So there's your cup. Here's your handle, and now it's busting a move. The 200-day moving average is at 109. It's crossed over. It's crossed over the 50-day moving average, 34, over the 20. Do small increments. Like, okay, forget 109. What if it goes to 104? It will. So downtrend line attack 104. The calls on EA, like I put out there, let's say for next week is $1.60. So you buy sometime, buy at the end of the month or by April. Maybe they'll cost a few, maybe $2. You're good to go. Would you swing this a month out with calls? Swing what? Facebook? And by the way, next time get a headset, please. Tandem, sure, absolutely, absolutely. That's what I'm doing. That's why you should go through my Twitter feed. Go to my Twitter feed, look at the one, April 18th, April 18th. I'll even shoot out to May 18th. The way that stock looks, it's probably going to get bought out. I'm not kidding. These are unique companies. And the big boys need companies like this. So you look at the weekly chart, why can't the stock go to 111? Their earnings were great. They're on a solid technical move. Why can't it go back to where it was, 113? Why can't it get bought out at 130? We always think what can go wrong. Why not think what can go right? This is a fantastic chart. And I think Kramer's hot for it too, which doesn't hurt. And we've been trading Tandem for 2-3 weeks now. Actually, not 2-3 weeks, right before earnings. Yeah, since the middle of February. What's another one? I mean, there's a whole bunch of them. I like NVIDIA. I think NVIDIA is good for $200. Somebody says, really? Why? Because I like eating semi chips for breakfast. I mean, come on. What the heck? Look at this chart. Does this look like the stock's just going to collapse and die? We started buying NVIDIA late. I didn't buy it. I mean, yeah, we know. We actually did initially buy it at the lows. Then we let it go. And then we re-entered NVIDIA at around the 150 level, 168. What a good looking picture. Macro falling wedge, breakout, range, 174. Play NVIDIA for 2, 3, 4 points every time. My opinion, this was your big breakdown. Well, everybody and their mothers just said, that's it. Crypto's over, NVIDIA's over. Well, what about their AI business? What about their autonomous, car AI business? What about their gaming? What about the Turing chip? What about other stuff that they're doing in artificial intelligence? Stock probably goes to 204, or at least to the 50-day moving average, which is 212. Fund managers who know are buying. If you want to play very short term, 173. This is a very bullish candle. First week, it had a bullish candle like this. Should be an expansion. Now, barring other factors out there, like a massive breakdown of the US-China deal, some stupid stuff happening with Brexit, things like that, technically, the stock's poised to move. So here's a name that everyone knows, which I think has room to move. And again, if you buy a bunch of it, you don't need to close your eyes and not look at it. If you're up on something, take some profits. I do. You got a gap open in the market, take a profit. I'm talking about the swing nature where you can always leave something out a month or so out and then not necessarily worry about the intraday noise. Okay, looks like nobody else trades stocks. We got 2 great questions from House and Nazir. And on that note, like I said, you want to know what stocks I like. I try to put as many as possible out there on my real-time Twitter feed. Make friends with my real-time Twitter feed. Date it. Take it out to dinner. I shouldn't say make love to it. Yeah, make love to the charts. All right, how about that? And the more you get to know my charts, the better off you'll do. Saying all that, the market is a very dangerous place. The volatility is intense. We are approaching some pretty severe resistance levels. Upside momentum is there, but trade management is serious business. It's difficult for me sometimes. I can imagine what is out there for other people. If you want to really get into it, sign up for the advanced coaching sessions. Aside from that, like we say, this is the real deal, not the fake stuff. Have a great evening. God bless you all. Let's make it happen. And if you start to see some real breakout moves, always be involved, always be engaged. Because if you're not, you're always going to be a spectator. And that doesn't do anything for anyone. Make yourself proud, make your families proud, make your partners proud. And more importantly, make yourself proud that you're doing something right. Do it the right way, do it the technical way. Have a great evening. God bless you all.